Hello, I am Mijun Im from the Department of American Cuisine. Today is June 5th, and let's start today's United States stock news. Today as well, I, Mijun, will deliver the news to help United States stock investors stay on track without wavering. Before we begin, a brief announcement. I was looking at a house listed on Zillow in Withyville, Malaysia, where my wife is from. We couldn't go see the house in person, but we contacted the representative of the local university through Zoom, and he visited the house for us and showed us around via video call. That's how we got to see the house. We might be able to live in this house starting from August. Just thinking about it makes my heart flutter, and I'm also a bit nervous. Now, if we just have about 2 more months, we can organize our life in the United Kingdom and then move to Malaysia from Korea without even a 1-hour layover. We will be moving to Malaysia. We will be moving to Malaysia. Wison Bangsong and Wison All-in-One members are also going through a lot of changes. So, little by little, we're planning to actively open up new content that can deliver faster news and allow more people to participate in investment activities. We will make sure that more people can benefit from Wison channel and that Wison All-in-One membership can be more helpful to you. If you wait just 1 or 2 more months, you'll be able to experience the new look of Mijun that many people have been waiting for. Now let's begin today's American stock news recorded on June 5th. Today as well, I'll summarize the current situation of the United States stock market for you. Let's take a look at the S&P 500 chart. It was mixed yesterday as well. You can see that there are a lot of red and green colors mixed together. If you look at the numbers, you can see that more sectors had lower numbers. Even so, there were some exceptions, and since most of the megatech companies were in the green, the S&P 500 index was able to record a plus. That's how you can see it. The Dow Jones dropped 0.2%, while the S&P 500 eked out a 0.0074% gain, remaining in positive territory. And since the tech-heavy Nasdaq performed well, it recorded a 0.32% increase. That's how you can see it. The Dow Jones, sensitive to the economy, performed poorly, while tech stocks, less affected by the economy, did better. That's one way to interpret it. Yesterday, in terms of the actual United States economy, there was some bad news. Yesterday, the Automatic Data Processing Employment Report was released in the United States. Usually, the government releases the official employment report, but that's scheduled to be released on Friday. The Automatic Data Processing Report, released yesterday by Automatic Data Processing, announces employment figures based solely on the private sector. Now, let's talk about the results that were released. In May, private sector employment in the United States increased by 278,000 people. The issue is the consensus was 110,000. So, compared to the market's expectations, the number was way too low, and in April it was 60,000. So, compared to April, in May, the employment numbers decreased sharply, which shows that the economy is slowing down even more. If you look at it this way, it's understandable why the market is worried. Well, despite that, the market didn't fall much. We need to organize and analyze the reasons for that. Well, first of all, it's because of the Trump factor. He said Powell should step down from his position and made a certain gesture while making this statement. President Trump pushed for an immediate rate cut right after the Automatic Data Processing report showed that private sector job growth was at its lowest in several years, which was interpreted as a sign of economic slowdown. This put additional pressure on Chairman Powell to lower interest rates. He actually said it directly. The automatic data processing numbers were released. In English, it's now called to lower the rate. But to be specific, Powell is being pressured to lower the rate. This is how things are going right now, and that's why there's a push to cut interest rates. Moreover, he can't speak more truthfully. President Trump emphasized that in order to promote economic growth, it is necessary to continue lowering borrowing costs. The Automatic Data Processing report released yesterday showed disappointing numbers, which surprisingly led to a slight strengthening of the stock market. President Trump has repeatedly urged the Federal Reserve to lower interest rates, questioning why the United States is keeping them high based on his demands. That's just my personal opinion. According to the Automatic Data Processing report, in May, only 27,000 new private sector jobs were created, falling short of expectations and suggesting the economy is slowing down faster than anticipated. Despite this weakness, the United States stock market remains bullish. Let's proceed to the next subject. But the current upward momentum in the United States stock market is so strong that it can be interpreted this way. So why is the atmosphere heating up like this? It's because the United States is leading the global economy. The fact that the national interest rate has fallen means that the popularity of government bonds has increased. Government bonds are considered safe assets, so the news that more people are buying them means the economy is slowing down. It reflects the popularity of government bonds. So that's why the United States Treasury yield has declined. Consequently, the market anticipates the Federal Reserve will cut interest rates by late this year or early next year. That's how you can interpret it. When interest rates decrease, it becomes cheaper for businesses to raise funds and for individuals to borrow money. And also, when the current value interest rate is lowered, stock trading volume increases. Why is that? We invest in stocks because we expect the future, either because we believe new industries will be created in the future, or because we think the value of cash will decrease. That's because interest rates are falling. To put it simply, when the economy improves, expectations for future interest rates rise, causing long-term interest rates to increase. This in turn can lead to a decrease in stock valuations. In a way, the cycle can work in reverse. There is just one thing to keep in mind. Here's the thing, right now we're in an upward phase, so all of this only applies when we're in an upward phase. This way, bad news can be interpreted as good news. Because there's an expectation that interest rates will go down, the stock market maintains a positive momentum. Especially tech stocks performed really well. The reason for that is because recently, the upward trend of artificial intelligence-related stocks has been extremely strong. The reason is artificial intelligence-related stocks don't really have much to do with the economic cycle. They've shown structural growth, and it's not tied to the economy or the cycle. Instead, they continue to grow structurally, so they can keep rising step by step. That's why they're maintaining this strong growth trend. Recently, artificial intelligence-related stocks have been leading the United States stock market. That's how much influence they have. I'll take a look at various market indicators and move on. First, if you look at the market cap of the S&P, it recently dropped from 69.84 to 69.24. There's no change in that part. And even among the stocks that have been rising for more than 200 days, the percentage hasn't changed much either. The market has been fluctuating within a specific range, and viewing it from this perspective will provide clarity. If you look at the advanced decline ratio next, you'll see that it has slowed down even more than yesterday, so the volatility in the market has eased a bit. 17 and 61 are historically very low volatility indices. The Fear and Greed Index indicates that the market sentiment is highly positive compared to historical levels. People are confirming that they are letting go of their worries. The market score for the choice stocks is also not bad. It remained at 77 until recently, indicating it has persisted at the greed level. So, to sum up, if you look at it, the current situation is that the market sentiment is rapidly rising to a level that can be interpreted as bad news turning into good news. That's because there are still a lot of people who are holding on to their greed. Additionally, if stock prices go up, there needs to be a reason for liquidity to stay in the market. It can be interpreted historically. Next, let's discuss Miyun's historically excellent taping performance. We'll go over the choreography and technique at the top again. With this continuous rise, the stock is maintaining its upward momentum. After the earnings results and the actual earnings announcement, it is showing a surge of more than 20%. Meta rose by 3.16% for the second time, and it was good for the second time. Taiwan Semiconductor Manufacturing Company rose 2.42%, Trade Desk 2.22%, Talent Energy 1.77%, Broadcom 1.65%, Alphabet 1.13%, Uber 1.1%, 1%, Advanced Micro Devices 1.08%, Amazon 0.74%, and NVIDIA 0.5%. Bitcoin had 104,850 trades based on transaction volume, and the other items were listed in small amounts. Celestica was down 1.12%, Nextera was down 1.83%, Vista was down 1.88%, Palantir was down 2.37%, Strategy was down 2.41%, and Bito dropped by 2.62%. Lastly, Tesla is at the lowest position. It dropped by 3.5% in the middle of the market, and even after the market closed, it showed an additional drop of 1.51%. Yesterday, artificial intelligence stocks performed the best. Among them, one was related to Amazon's news. But actually, this news is about Amazon's entry into NVIDIA. I want to evaluate it this way. Let me explain what this means. Amazon has announced a data center project worth $10 billion. When a large-scale project like this is announced, it means that artificial intelligence infrastructure has been fundamentally improved. That's how you should see it. Amazon is leading the way today as expected. On June 4th, Amazon announced that it plans to invest $10 billion to expand its data center construction in Northern Virginia. Amazon's $10 billion investment in North Carolina shows our commitment to leading the future of cloud computing and artificial intelligence technology innovation. In Amazon, David Zapolsky, who is responsible for global legal affairs and cooperation, is the highest-ranking executive. This investment will establish North Carolina as a hub for cutting-edge technology, create hundreds of high-quality tech jobs, and drive significant economic growth, he added. Amazon's investment is the largest single investment in the state's history, providing hundreds of high-quality jobs in the region and boosting economic activity. This is Stan's opinion, the governor of North Carolina. Amazon made this investment with the promise to work with North Carolina's educational institutions and alliances to expand data center industry training programs and provide more hands-on learning opportunities. Now, here comes the most important part of this story. According to Synergy Research Group, the number of large-scale data centers operated by hyperscalers is expected to reach 1,136 worldwide by the end of 2024. This is more than double the number since 2019. That's an incredibly large number of new data centers being built. And what about the research facilities? It's projected that 140 new data centers will be built each year, indicating a significant ongoing trend in annual data center construction. Now let me show you this. According to this research, currently 54% of the world's data center usage is concentrated in the United States, 16% in China, and Europe is in third place with 15%. Now, as you can see here, the part that's growing rapidly is China, which accounts for 16% of the total data center usage. However, when it comes to NVIDIA's total sales, the proportion of sales coming from China is actually quite low. So, as more data centers are built and operated, NVIDIA's sales will naturally increase. This is an official statement. There's another important story coming up. In the process, it was explained that the size and scale of new data centers are expanding rapidly. The scale is steadily growing. However, in recent years, as companies have been building artificial intelligence-driven infrastructure, this trend has accelerated even more. Recently, in relation to artificial intelligence investment, which market has been attracting the most attention? There was a concern that too much capital is currently being concentrated in artificial intelligence and that this kind of investment might not be sustainable. But this time, according to the research results from Citi Research Group, it turns out that such investments are actually being accelerated. Although the amount of data center demand has already increased a lot, it seems that there is still potential for even more rapid and efficient growth in the future. As new data center infrastructure is introduced like this, NVIDIA sales are expected to increase even more. That's how I would like to interpret it. So when that happens, this news becomes the best news for NVIDIA. That's how I think about it. In the report released by Mark Andy this April, it was stated that when building data centers for artificial intelligence workloads, about 60% of the total investment cost is spent on computing hardware, whether it's CPUs or GPUs, used for artificial intelligence acceleration. They presented this analysis for a specific reason, and according to the contents recently announced by Group, whether it's the megatech industry or hyperscalers, they are investing about 35% to 40% of the entire data center capex in artificial intelligence, optimized acceleration servers. But interestingly, until last year, this figure was only about 15%. So the more you go, the cheaper the cost of using servers becomes. To achieve rapid, high-performance growth, you need to set up excellent performance servers. Only then can the data center be competitive, allowing us to predict the future. Now, as you can see, among the total data center costs, the proportion of server costs is rapidly increasing. Then, among the server costs, you might wonder how much of that is taken up by GPUs. This is also increasing very sharply. I went to find it myself. I found that about 50% to 60% of the total server cost is taken up by the cost of GPUs. So, to put it another way, if you look at the server base price, at least 60% of the total cost of a dedicated artificial intelligence server is spent on purchasing GPUs. That's how you can interpret it, at least 60%. Now, if we do a simple calculation, earlier I mentioned that about 35% to 40% of the total data center investment cost goes into servers, but of the server cost, at least 60% is for GPUs. That's the minimum. So that means at least 21% to 24% of the total data center investment cost is likely to be spent on purchasing GPUs supplied by NVIDIA. When it's announced that $100 trillion worth of data center projects are being launched, it's reasonable to interpret that NVIDIA is likely to generate at least $20 trillion or more in new sales from those projects. Now, let's move on to the Synergy Research Group. It's anticipated that around 130-140 new data centers will be built annually in the coming years. So if a single data center needs to build $2 billion, and if 130 to 140 new data centers are built like this, won't NVIDIA's growth continue in the future? The main reasons for my view that growth potential remains high are the ability to keep growing and the possibility of further acceleration. Next, I prepared news related to Meta. Meta has announced that it will collaborate with Disney, A24, and Chase Today to create virtual reality headset content. Let's listen to what it's about. Meta is working closely with Hollywood to secure exclusive content for its premium next-generation virtual reality headset, which will be released next year. This is the current industry explanation. Meta is not only approaching Disney and A24, but also small production companies. The reason for this is to secure hundreds of short-form, independent, and music video-type video contents based on intellectual property. By intellectual property, I mean these. Usually, what we specifically refer to are copyrights and licenses. Industries like Disney have a lot of very popular characters. They are now actively working to safeguard the rights to utilize these works, as demonstrated here. Meta is planning to release a virtual reality device with this kind of content next year. Virtual reality is a technology that creates a virtual reality, and they are expecting to attract users with these kinds of devices. Now, let's talk about the importance of copyright. When you use copyrighted material, you have to be careful and always have a sense of responsibility. But the thing we need to remember is that in the end, hardware becomes outdated over time. As technology advances, these issues get resolved. So right now, there are some limitations and economic issues like with the Vision Pro, but eventually as hardware improves, content will become the key. This is how we can predict what will happen in the future. The new product that Meta is expected to release next year is called Roma. This new product, codenamed Roma, is a high-performance device that provides better video quality than the current best-selling Meta Quest virtual reality headset. Therefore, competing with the Vision Pro is possible, which is why it's gaining attention. It's not a headset like the Quest or Vision Pro that you wear on your head. Instead, it's a small device that you can place on your main computer and connect to it. Unlike bulky and heavy devices, it's not a cumbersome headset. So if you look at it, it's like connecting a different device to your glasses, making it easier and more convenient to carry around. That's how you can think of it. Meta plans to price this device under $1,000, which is higher than the $300 in Quest starting price, but significantly lower than the $3,500 Vision Pro. We'll be able to look forward to it. Meta is currently collaborating with Avatar's director James Cameron to create exclusive virtual reality content and a Lightstone entertainment experience. Yang-san already announced the partnership last year, and there's also Disney. Currently, Meta is developing Star Wars-themed virtual reality content for Quest. According to related sources, it's Meta. Meta is not only creating new content, but is also considering adapting existing movies and dramas into virtual reality experiences, according to sources. Meta wants the content created by its own partners and investors to be exclusively available on its virtual reality devices for a certain period of time. However, after a certain period, they plan to release the content as a 2D version on streaming platforms for additional revenue and to reach a wider audience. Initially, the content is only available and functional on their virtual reality devices. That's the sole way to access and use this content. In the end, by expanding to Netflix or even Disney+, Korea will be able to reach a much larger audience overall. So, at first, they are making it in a way that's easy to access, and that's where we are now. At the beginning of the launch, there aren't many users who have the Meta device, so it's impossible to expect high accessibility. That's what you can see here. So, we can compare the present and the future, and in this way, we can try to understand it from this perspective. On the other hand, Apple did not charge separate fees to content providers when the Vision Pro was first released. This clearly shows the contrasting strategies of the two companies. After acquiring Oculus in 2014, Meta has been aggressively investing in the virtual reality sector for over 10 years. Do you know Meta Quest headset? In this area, it was the best-selling device, but it couldn't become mainstream. Well, the reason is this. As I mentioned earlier, the technology wasn't advanced enough to reach that point. If we use this and feel like we're really immersed, what would happen? Many people continue using it, but currently it's primarily for gaming. Looking at it from this perspective provides clarity. Well, but it's not just the hardware. They're also developing smart glasses, and Meta's artificial intelligence-powered Ray-Ban smart glasses are already out there, allowing users to leave their entries on social media. Smart glasses are lighter and more stylish than virtual reality headsets, but their performance is much stronger. Since its launch in 2021, Meta has sold more than 200,000 of these glasses by February. So at first glance, it looks like a pretty successful product. Meta has a Reality Labs division that covers the glasses part, smart glasses, virtual reality, and augmented reality, which is called augmented reality. Last year, sales hit 2.1 trillion won, but losses totaled 17.7 trillion won despite this. So far, the deficit has been enormous. Well, I think this is the strength of Meta. It's Meta. Over the past year, sales have grown by 19.37%, and earnings per share growth has recorded a whopping 47.45%. If you look at the margins, the gross margin is 81.77%, the operating margin is a whopping 39.1%, and the return on equity is 39.83%. It's skyrocketing with remarkable figures due to a straightforward reason. Right now, it's showing such great performance that investors are willing to pay a premium for the stock, even if it means accepting a lower dividend yield, as long as they believe in its future growth. If current performance is poor but investors focus solely on the future, the stock price will certainly be volatile. Currently, the performance is excellent. Debt is minimal, revenue growth exceeds 20%, and earnings per share growth surpasses 47%. Margin is incredibly good. So in terms of investment, you can see that the anticipation for investing in the United States is justified by these positive results. If you look at it this way, you'll understand. Now, the reason why expectations for the future of Meta are rising is because the present is supporting the future like this. This is how it becomes possible. Now next, I try to look at the momentum of Meta's stock, but the current momentum of the stock is just too strong. Out of the 26 indicators, only one has a buy recommendation, while 10 are neutral and 16 are sell. Now, let's go straight to the stock chart and take a look. The resistance line is between 650 and 670, and we've already touched this area. So, the short-term support line is formed here, and you can interpret it this way. But the issue is that the previous high hasn't been surpassed yet. This area is between 740 and 750, and there's a strong resistance line established here. That's how you should look at it. If it can break above 740, which was the previous high in February 2025, then the momentum will get even stronger after that. If that happens, we could even expect it to go up to around 800. So, if it gets rejected around the resistance level of 740 and starts to fall again, what happens then? In that case, you see this orange line here? That's the 21-day moving average. If the 21-day moving average doesn't provide support, we can expect something like this to happen. So if that happens, 640 is currently the 21-day moving average, so in this range, we can expect some consolidation before possibly seeing another upward move. That's how you can look at it. Now, if the 21-day moving average is broken, then there's a yellow line below it. This is currently the 589 level, but if it drops all the way down to the 61 line, which is below the 589 level, then it would be a complete downward trend. That's how we can interpret it. As we observe the market step by step like this and keep an eye on the price movements, we can adjust our investment strategies accordingly. This is just my personal opinion. Next, I think we need to look at the Tesla story. Tesla is set to announce its robotaxi on June 12th, so right now there are high expectations for growth. Despite that, Tesla's stock price rose by 3.55% yesterday, with trading volume increasing by 1.75%, indicating a strong upward trend. The robotaxi launch was not scheduled for this week, so why did the stock price and trading volume react so sharply? Let me explain the reasons behind this. Two companies' businesses are reportedly overlapping. Let's examine why this is happening. Tesla's main markets are China and Germany, and the actual sales in these regions, as well as one more factor, are important. Elon Musk and Tim Cook's public dispute caused a stock price decline. This summarizes the situation. Now, Elon Musk strongly criticized the immigration policy that Trump supports. This can be seen as a move to maintain influence over Tesla, and such concerns are being raised. Now, until recently, Tesla's chief executive officer Elon Musk and President Trump had a very good relationship. So President Trump has shown a lot of influence over autonomous driving policies, and that's why there were so many concerns. But if the situation changes after the election, then Trump's support could disappear, and that's why there are concerns. But now actual sales are increasing. If you look here in Germany, Tesla sold 1,210 units in just 1 month of May, which is quite a lot. This represents a 36% drop from the same time last year, and there's more. From January until now, the total number of units sold was only 7,030, which is a 58% decrease compared to the same period last year. In Germany, sales have dropped significantly recently, so you can see it like this. Next, China's sales figures have been announced. Last month, about 62,000 cars were shipped from the Shanghai factory. This figure represents a 15% decrease compared to the same period last year. The actual performance remains disappointing due to the strained relationship with President Timpei, which used to be strong. That's why Tesla's stock price is fluctuating, and these are the two main reasons. If you look at it this way, you'll understand. But that wasn't all. One company's stock price is surging, becoming a major topic of discussion. The reason is that Tesla's self-driving business is a key factor in the company's valuation, and this kind of concern is growing. What this means is that Tesla's autonomous driving technology is growing rapidly as an economic asset. Why? Because the economy is like a leader or a rider, but Tesla is the camera itself. But now there are growing opinions that Tesla's autonomous driving method could be a key factor in fatal accidents. For more details on this, rather than explaining it myself, I think it would be better to check the Bloomberg News directly for a more accurate understanding. That's all for today's broadcast. Thank you to everyone who stayed with us until the end, and I sincerely appreciate your support. I'll return tomorrow with more varied and useful info for your investments. See you then. Let's continue investing in United States stocks together until we all reach financial freedom. Have a happy day. Thank you.
The most frequently asked question, the question that many people are asking, is why this incident that occurred in November 2023 is now being addressed. The key is to make it public. There are a lot of reactions about this. Right now, it's June 2024. But to be exact, this incident, which happened in January 2023, became important to Tesla because it triggered an investigation by the United States National Highway Traffic Safety Administration. The investigation continues. This incident showed how the United States regulates this technology. Let me explain. When looking at Russia's sanctions on self-driving cars, you have to understand the regulatory approval process and go through several steps. The reality is a bit different. In fact, Tesla is already manufacturing vehicles equipped with the essential components for self-driving, or at least partial automation. And if you order the full self-driving package, you can activate it on the road. The United States National Highway Traffic Safety Administration has officially stated that these vehicles are not safe or have not been proven to be safe. Based on these kinds of reported accidents, they are accumulating data patterns. In this case, the accident was analyzed along with several other similar incidents, and it was confirmed that the system was being questioned under certain conditions. Therefore, it was determined that it is necessary to investigate whether the system is safe under those conditions. This is a so-called risk, which means there is a possibility that it could happen again. Although this incident is rare in the United States, about 40,000 people die every year in traffic accidents. Even though Tesla claims to reflect such realities, it's very rare for individual accidents like this one to get so much attention.
For the family of Sejona's stories, this is a very emotional event, and it's also heartbreaking for the Tesla driver Kem Stong. But from a technical perspective, there is a clear difference between the way Waymo's LiDAR and Tesla's system operate.
This part is the core technical aspect of this incident. Elon Musk claims that Tesla can achieve autonomous driving using only cameras without high-cost radar or LiDAR sensors. This is a rather unique position in the industry. Waymo takes a completely different approach. Waymo provides a fully autonomous driving system that doesn't require the driver to intervene at all, so it relies more on sensors and uses higher-end sensors. So in the end, is the main question raised by this incident really just about the camera? Especially this time, the car was driving low and the visibility in front was poor, making it a difficult situation to detect. Even in the closed circuit television footage, you can see it, but it was hard to tell what was in front of the Y car that caused the accident, and the victim appeared in front of the car just moments before the collision.
Thank you.